Hello and welcome to the Smart Divorce podcast. I'm delighted to be joined today by Dave Child. Dave is a specialist insurance broker, and we're going to talk today about getting insurance for the first time. So if you have been delegating this job of doing the searches to your soon-to-be ex, hopefully listening to today's podcast will help you to know what you're looking for and know what you're absolutely not looking for. And if you're in a sticky position, which Dave will explain to us much more about very shortly, hopefully you'll find somebody who can help you out. So I'm going to let Dave introduce himself properly. Thank you for joining me today. It's a real pleasure to get to speak to you about this, because I know we've been trying to do it for a little while now, haven't we?
We have. Hi, Tamsin. Hi, everybody. I'm Dave Child. I'm the Managing Director of Sale Insurance Services, SIS. We are on Washway Road in Sale. We're a high street broker, but we trade nationally. Most of our clients are online, so we pick them up from all over the UK.
That's excellent, because so do we. And this podcast does even reach the US, so yeah, all over the place. So tell us a little bit about your specialism to begin with, and then we'll move on to the types of insurance that you could look at.
Okay, well, there's three areas that we specialize in. I mean, insurance is a big world. A lot of your listeners today will be perhaps looking at insurance for the first time, never insured the home or contents or the car. There's three areas that we specialize in, not so much in the products itself, because we do all sorts of products from travel to liability to casualty to property. But there's three areas we deal with, which is the actual individuals themselves, people who have undisclosed or unspent criminal convictions, people with adverse financial history, which would incorporate people with debt relief orders, IVAs, bankruptcies, which there are an awful lot of, looking at what's happening in the near future with COVID and employment, could even get even more, potentially larger. And the ever-growing market of people with previously cancelled policies and voided policies, because the way insurance companies work, because there's probably around about 4 billion of insurance fraud out there, and that's known insurance fraud. There's about another 2 billion of non-disclosed or unknown insurance fraud. Insurers are spending millions on data enrichment, which to you and me means that if one of your listeners defaults on their utility bill for whatever reason, that information, the utility bill, will be selling to the likes of Aviva, Ageas, and all the composite insurers and others around. Exactly, not just utilities. There's so many companies out there that are selling your information. Insurance companies are buying it up, and the reason why they're doing that is because they, in the normal market where we don't really exist, but in the normal market, when you go online to buy your insurance, they can't afford to have too many human beings involved in the process, because it's too big and it's too expensive. So they use algorithms to work out what your premium should be. So these algorithms are set to the information that they're buying and that they have an understanding of. So if you have had, say, a default on a gas bill, and the insurer decides that that person now is a slightly different type of person, maybe someone that we don't really want because of their adverse financial history, they'll set their algorithms to either not quote or to quote higher. That's as a for instance.
Wow.
Interesting. But it gets even more complex. Although we see a lot of people with those main two issues, the other one, which is the voided policies, is even bigger, because the insurance companies know pretty much all about you, because all your information is there either to buy or to know anyway. When you take out an insurance policy, you'll be given a statement of facts, or you'll be presented with a proposal form. That's your contract of insurance between you, the individual, and the insurance company. Now, that information has to be correct. So a lot of the time, you're going to be answering questions, or rather the insurance company are going to be asking you questions that they actually know the answers to. It's a bit like your mum when you were a kid. She knows where you've been. She just wants to know if you're going to lie about it. So insurance companies will ask you the questions about your past and what's this and what's that and where do you live. They can trip people up. You get guys that have got living in a mid-terrace that say that the car's parked on the driveway. Well, the insurance company know it isn't, because they know you live in a mid-terrace. So what happens is that if you choose to falsely answer the questions, what that gives the insurance company the ability to do is to deny or repudiate liability on any claim that you present to them. And it's a massive growing area. It's huge. So I'll give you an example. So we have a lady. We had a lady that came to us a few years ago. This is just an ideal story for you, but there's so many different types of situations. She's a little lady. She came Kidderminster, I think. She came down one morning. A kitchen's awash with water. There's been a leak. Knee-jerk reaction. She phones her insurance company, and the insurance company said, just phone the plumber. £300 later, she's back on the phone to the insurer to cancel the claim, to stop the claim. She doesn't want to claim. A policy excess, the amount is small, so therefore there's no point pursuing a claim. What the insurance company should tell that lady is that now that she's reported that incident to them, that incident is put onto what's known as the Q database, the Claims Underwriting Exchange database. That database is used by all the UK insurers, and they share the information. Okay, a bit like the guy's been kicked out of the pub. The landlord's going to ring up all the other landlords and say, look, he might visit you. You don't want to see this guy. So they all know about it. So what she'd done, she'd put the phone down, and she thinks that's the end of it. So she's not been advised properly. So I don't know who the insurer, but it was a direct insurer. She's not speaking to a broker. So a year or two later, she's gone with another insurance company now. There's a serious claim. She puts the claim through, and the insurance company repudiate liability. They deny the claim on the grounds that she's made a non-disclosure of a previous incident. And she said, well, yeah, there was an incident a while ago, but I didn't make a claim. And it's the way that the insurance companies veil the question. You think you're reading the question, you think you're reading it, but you're not. You see the word claim. So has anybody living with you or you suffered any losses or incidents in the last 5 years or claims? Well, she's put no. Well, she should have put yeah, because there was an incident. And that's an example of how insurance companies are protecting themselves, protecting themselves, and give them the ability to say, no, we're not paying you out. So she ends up at our door. Now, she's not what I would exactly describe as a non-standard client, but she is now, because she's dragging this around the market. And unlike a claim, and unlike a conviction or a bankruptcy, these things tend to become spent after a period of time. But a refusal or avoided policy is never spent. She's now disclosing that to all the, for everything for the rest of the days. So we were able to, sort her out, give her a policy that was, fit for purpose and everything else, all the disclosure there, so she can see on the form, she can see on the form that she's disclosed it. So she knows she's safe from everything. But before she went, what we now need to do, which is in a way sort of compounding misery a little further, is that we now need to explain to her that when she comes to renew a car insurance next, on the car insurance proposal, as it is on a business proposal or a property proposal form, the question is have you ever had a policy voided or cancelled by a previous insurer? Well, yeah, but she would have put no, because she's filling out a motor insurance form. But the question is, have you ever had a policy, not a motor policy, not a home insurance policy? So again, if she answers no, and she's involved in an accident or a car stolen, the insurance company can now have the ability to say, I'm sorry, but we're not going to pay you out because you made a non-disclosure of the fact that you should have told us that you had a previous policy voided. Because in the insurance world, if you go back to 1600s when insurance was invented in a coffee shop called Lloyd in London, ever since then, the last few hundred years, the insurers and today still have this mentality that you have the physical hazard, which would be perhaps your car or your home or your business. And then you've got the moral hazard, which is you. And they look at the moral hazard. And if they think that you've had a policy voided, you're not our type of customer. You've had a criminal conviction for whatever reason, you're not our kind of customer. Or you've had a debt relief order, or you've entered into a bankruptcy, you've hit hard times, you're not our type of customer. So this is what the insurers are doing. I can sort of see the point because they're getting attacked for fraud all day long for millions and billions of pounds every year. But what's happening is that it's not that the proper culprits are being caught out here. It's the low-hanging fruit, the smaller guys, the me's news, who have never really done anything wrong, but just haven't read the question right. And this is the reason why I would always guard against going directly to an insurer, even though it's going to be cheaper. It's cheaper for a very good reason. They don't want you to have the advice, impartial advice, independent advice of someone like us, who can then explain to you why you shouldn't be speaking to your insurance company about this incident. Like in every policy says you must, within a certain period of time, notify your insurance company of the claim. We actually say, no, don't do that. We're going to actually break your policy condition and say, no, don't do that, because they will hold it against you.
Yeah, sure. Wow.
How deep down this rabbit hole do you want to go? Because I tell you, it's a nightmare, and people don't know. Honestly, this is the world that we live in, and there's so many people that are affected one way or the other by this, because of course it's the household as well. You know, if you've got a guy who's got a conviction for whatever, and he's gone back to live with his mum and dad now have to tell their insurer what's that he's living there. So there's millions of things that I could tell you, which we probably don't have the time for. But anyway, there you go. That's a synopsis. Yeah.
We're best probably not have too many more scary stories. So turning this around on its head, and I'm going to go out and look for insurance. Never done this in my life before. Let's start with home insurance, because you and me have talked about home insurance before, and you frightened the living daylights out of me on this one. Yeah. So home insurance, my starting point, and you put me very right on this, is always these comparison sites. But there's a reason why we might not want to do that, isn't there? So go on, tell me where we should start with home insurance. Yeah.
With home insurance, if you own the property, if you own the home, or if you have a legal financial interest in the home, then you're liable. You got to insure it. Okay. So what's important is that you get the figures right. And 70% of people in the UK that make a claim are underinsured because they've not been advised properly. Again, for whatever reason, an insurance company is not going to give you advice what to do. So if you're going to insure a property, what we would recommend that you do is you go to the RIC site, the Royal Institution of Chartered Surveyors, where you can complete a very quick 4 or 5 question about you, your postcode, your property, and they will tell you, it will give you a good indication of what the rebuild sum insured should be. So it's not what your house is worth. No one's really interested in what your house is worth. It's what it's going to cost an insurance company to rebuild your home. And in the event of a claim, the guy with his clipboard would come down and he would assess what he would think is the rebuild cost under a catastrophe situation where you've got a gas explosion. So he's going to include things like debris removal, 10, 15 grand, depending on the size of the house. Architect fees, lawyer fees, planning fees. So we always advise our clients to add around about 30,000 or so to the cost of the rebuild sum that you think it is. So if you've got a 3-bedroom semi-detached, you're probably going to be somewhere, and it's a standard brick build, you're going to be somewhere around 250, maybe 275. We would always say add a little bit more to that, just to give you that cushion. Buildings insurance is cheap, it's not expensive, you know, it's £1,000. So even if you think, well, I'll tell you what, add 30,000 to what it is, it's maybe going to cost you another 30 quid. So that would be a good start. It's getting it right. I mean, just speaking to a broker, whether you use that broker or not, you know, if someone was to ring us up, we would pretty much go through this. We'd give them the advice they need, whether they're going to be an end customer or not. If they want to go off and get it cheaper, people do. That's their prerogative. When you know, going direct to an insurance company, but there's so many hidden mines there that sometimes you have to work out whether there's a value to it or not. If it was going to come to car insurance is a great one, because you will probably find, Tamsin, that a lot of your listeners, perhaps it was always one of them was the person who insured the car, therefore the no claims bonus is in their name. Therefore, the person that you may be dealing with has now legally got 0 no claims bonus. So again, if you're dealing with the right person, that sort of information can be, if it was us, as long as we can get a copy of the last schedule that showed that that person's name was on there as a driver and that there's been no claims and they've been there for a few years, we'll give the 65% maximum no claims discount as a starter discount. So that's something that's worth knowing about. That it's not the end of the world if the policy was in his name. You know, there are ways of getting that equivalent discount to set you up again on your own car.
Sure.
So it's a big one. It's one that we see all the time, I can imagine.
Yeah, I'm sure. Just jumping back to home insurance for a second. I see all the time when I'm looking for my own home insurance, these unlimited rebuild cost figures, so you don't have to put anything in yourself. It says it's unlimited. I am massively skeptical about this. Am I right to be massively skeptical, or am I showing my cynical side?
No, you're right to be cynical. It's always good to question it, but I would say no. If you've got someone who's got the headache of thinking, well, how am I going to work? How am I going to calculate the rebuild sum? Okay, with us, because we're dealing with people who can't access the market because of various issues. Sure. We like to get the sums insured right. If you're perhaps got no previous history of anything that needs to be disclosed, and you're in the open market, you can get a quote from anybody. What tends to happen is that you would put a figure of, say, well, okay, I'm going to put the building sum insured at, say, 200,000, and you put the quote, so you put that in. Contents are going to put as 30,000, 40,000 pounds or whatever. Excuse me. By the time you've got your quote through, the insurer will put up to £1 million, which is great, because you know that in the event of something going wrong, I can't be underinsured now. So that's actually not a bad thing. In fact, it's probably a good thing. You know, and again, sometimes some of them do it on contents as well. You may ask for 30,000, but they'll give you, say, 75,000. You know, AXA do that, Legal and General do that, Aviva do that. So that's a really good thing to have, because at least you know that nothing can go wrong.
Sure.
You know. Okay.
What was I going to ask you then? Brain's gone. Friday afternoon. So what about, talk to me a bit about excesses, because they seem quite, both on home insurance and car insurance, they seem quite broad. If my thinking is the last thing I'm going to do is claim on my insurance because I know it's going to put my insurance up, should I be thinking, well, I might as well have a high excess? How do we deal with this?
Yeah. Well, that's like the same question of you speaking to somebody about the financial situation and they're how risk averse they are. So so if you're asking me what kind of an excess you would prepare to stand, I would probably go reasonably high, because if a damage, the last thing I want to do is claim on an insurance policy, because once you start claiming for it on an insurance policy, the premiums are going to start going up. Having said that, if you we had a penthouse in Essex recently that suffered smoke damage. We had to move the family out to a hotel. At the end of the day, it was a six-figure sum, but when their policy came up for renewal, the premium was pretty much the same as last year, which we underwrite ourselves. However, the person who's claimed 3 or 4 times during the year for 800, 600, 400, 1200, that's the claims frequency insurance companies don't like. Anybody can suffer smoke damage. Anybody can suffer a break-in. You know, so what I tend to do is I'll think of a sum, maybe £800,000. Anything less than that, I'm gonna deal with it myself. So if I break the TV, something happens to the TV, I'm gonna sort that out myself. I'm not gonna put a claim through. So I would go for a 750 excess. You may find somebody who perhaps maybe either can't afford it or don't fancy doing that, in which case keep the excess as standard. Most excesses these days have a compulsory starting point of 100. You're not going to get a policy that doesn't have an excess. Most of them do, but again, it's how risk averse you are to that.
Okay, that's good to know. So I'm newly divorced. I'm not, but let's think I am. And I'm probably looking for a new car potentially. And I might have got to insure my house for the first time. Where do I start?
Yeah.
Let's assume that I am not in one of those categories that you talked about, because I know if we are, we're going to ring Dave up. But if we're not, where do we start?
That'd be nice. If you're computer savvy, there's no harm in going on to any of the aggregate sites like Money Supermarket or Confused.com, because at the end of the day, they are in effect just an online broker. We're a 3D Tinder broker, if you like. We're real. You can touch us. We're on the high street. You can actually come into our office. Whereas with the Confused.coms, so they're an aggregator with say 20 insurance companies on there, but they're going to make their prices, generally speaking, cheaper than maybe the broker market, because they want you to go direct. So you're only going to get their advice, which is never advice. You're only ever going to get what they want you to know. Okay. So, but if you're computer savvy and you're okay, you can go on there, you can put all your information in correctly and get a price. And if you feel confident that you have answered the information correctly, you've got your sums insured right, then there's no harm, and that the price is fantastic, and it's with a really good company, or you've heard of them or whatever. There's no harm in clicking let's go button, and because there's no reason not to. The only time, people think of insurance maybe for half an hour once a year, but people are making a claim are thinking insurance every 10 minutes until that claim is resolved. And if you've gone on an aggregator site and you have, or you've gone direct to Marks and Spencer or Tesco or Direct Line, it's you versus them, and you've got no one to hold your hand. So it all depends. For somebody who, what I would advise anybody listening is to do both the markets, the online market, and speak to a broker. Speak to a broker that you've heard of, maybe, that's got a good reputation, ring them up and ask them for a quote. And then you can ask them questions. You can interrogate the information.
Sure.
You know, and then you can decide, you know, is it worth the extra 30, 40 quid that this policy is more expensive? But I've got that metaphoric arse I can kick during that 12 months if something goes wrong. I think there's a value to that personally, but most people don't understand that value until they've suffered the claim. You have to drink bitter to understand bitter, you know, and you don't know it until you've actually in that situation.
I like that one. As a former pub landlady, I love that one. We're probably
that'll be something different in a bit.
Well, that'll say good. We're probably getting towards the end of our chat now. I just wondered if you have any tips for our listeners to leave us with today.
Definitely the one about the no claims bonus. If you're going through this process now with you, Tamsin, or whatever, and these documents are available, get onto it now, or speak to the broker. Again, sometimes if you are not the policy holder, it's difficult to speak to the broker or the insurer because under GDPR rules you can't. They can't give you that information. Even if you're named on the policy, you can't. So just find that information out. Take a copy of the document whilst it might still be in the household, because that can be the difference between that can save literally hundreds upon hundreds of pounds on insuring your car in your own name. That would be a big one. The tip I would say is, you know, it costs nothing to speak to a broker at inception. So, you know, it's like if I was to sell a house or buy a house, you know, you can do this yourself online. But there's also a value to an estate agent. So you would probably, if I've never, you know, if you to buy and sell the house, you would possibly try both sides. You know, you probably speak to the estate agent, find out what you need to know. You know, that's what they're there for. And I think, and it might sound like you're using the agent or you're using the broker, but at the end of the day, we're there to be used in that respect. It's up to us to decide. It's up to us to tell you the policy. It's up to us to educate. I always tell my staff, you need to educate the policy holder. You need to educate the customer. And, you know, I'd like to think that the people that we speak to learn more in 10 minutes about insurance and how the insurance works than sometimes a lifetime with people buying insurance. Not trying to blow smoke with my own arse there. I just genuinely think that if you're educating the customer, then and if the price is within, you know, if the price is about right, then, you know, they'll probably think, oh, I feel comfortable, because this is what most of our people would say, they feel comfortable with us.
Sure, absolutely. And I can absolutely guarantee that 10 minutes with you learning about insurance taught me more than, and I've been insuring cars and homes for a really long time, taught me a huge amount. So I think that's excellent advice. Dave, thank you so much for joining me today. I'm sure everyone listening will have taken a huge amount away from that, and hopefully will know exactly what they need to put on their forms. But if at any point they need your help and advice, your details will be in the show notes, and they can just drop you an email or give you a call, and I'm sure you'll be happy to help out. So thank you very much for your time.
By all means.
Thanks.
Very welcome. Good to speak to you, Tamsin.
And you.
Bye.